Okay, here we are continuing in AUC Section 250 for our consideration of laws and regulations. So in the last video, we discussed procedures to do to possibly identify non-compliance or with laws and regulations, but in this video we'll talk about what do we need to do if we identify or suspect that there is non-compliance with laws or regulations. And this is in AUC Section 250.17 through 20. And it says that if the auditor becomes aware of information concerning an instance of non-compliance or suspected non-compliance with the laws and regulations, then we should understand the nature of the act and the circumstances in which it has occurred, and also obtain further information to evaluate the possible effect on the financial statement. So if we think there's non-compliance with the laws or regs, find out and understand more information about it, and try to determine how it affects the financial statements. And if we suspect that non-compliance may exist, then we should discuss that matter with management also, and with those charged with governance if that's appropriate. But if management or those charged with governance don't really help us, or they don't provide enough information to support the entity that it complied with the laws and regulations, then in our professional judgment, if we suspect or think that the non-compliance might be material to the financial statements, we should probably consider getting legal advice on what we should do in that circumstance. But if sufficient information about the suspected non-compliance cannot be obtained, then we should evaluate the effect of the lack of sufficient appropriate audit evidence on the auditor's opinion. So if we, in our professional judgment, determine that suspected non-compliance is really material to the financial statements and we can't get enough information on it, we might consider disclaiming our opinion or something like that if we're unable to get comfortable that the financial statements aren't materially misstated. And we should also evaluate the implications of non-compliance in relation to other aspects of the audit, including our risk assessment, reliability of written representations, and we should take appropriate action in that regard as well. So for instance, if we suspect that there's non-compliance with the rules and regulations, our risks would certainly change in our risk assessment for the transaction classes or accounts that it affects, as well as those related to contingent liabilities potentially. And also one of our written representations in our representation letter is that management has been in compliance with the laws and regulations. So that calls into question, how does that affect the representation letter? And also I think the point here that they're making is that if management is not staying in compliance with the laws and regulations, that might reflect negatively on their integrity and discipline and that sort of thing. So the representations might that they sign and rep to might not be reliable. So anyway, we've got a lot of explanatory material here to help us understand exactly what we need to do. This is all somewhat vague as far as what we need to do, because there's when there's non-compliance with rules and regulations, there's so many different things that could affect, and we really need to use our professional judgment, obviously. And so hopefully in this explanatory material, it gives us some more details on more pointed answers on what to do. So we've got A19 through A25, so let's go down to those sections. Okay, so now we're down to explanatory material. We see here indications of non-compliance with laws and regulations. So here it gives some examples of what might indicate possible non-compliance with laws and regulations. So it says investigations by regulatory organizations and government departments, or payments of fines or penalties. So certainly if we see penalties or fines, then they've not complied with something. Payments for unspecified services or loans to consultants, related parties, employees, etc. Sales commissions or agents' fees that appear excessive in relation to those ordinarily paid. So these things could be pointing to the possibility of bribes or something like that. Purchases made at prices significantly above or below market price. Unusual payments in cash. Purchases in the form of cashiers, checks payable to bearer. Unusual transactions with companies registered in tax havens. Payments for goods or services made other than to the country from which the good or services originated. So these are sort of money laundering methods. And additionally, regulatory agent audits or reports that are made available to us. We might see where they have not been in compliance with certain laws or regulations. Failure to file tax returns, that's certainly non-compliance with the law. So these are several examples that we might consider as non-compliance with laws and regulations, so we can keep an open mind to notice those. So right here, they have some examples of procedures that we could do to fulfill our requirement that if we identify or suspect non-compliance, we remember it told us that we need to perform additional procedures to get more information about it. And so fortunately, they give us some examples here of what we could do. We could examine supporting documents such as invoices, canceled checks, etc. We could confirm significant information concerning that particular matter with other parties, for instance, maybe banks or lawyers. This is why we send letters to the attorneys. We could also determine whether transactions have been properly authorized. So maybe we can check if the board of directors approved a certain transaction, maybe in the board minutes or something like that. We could also consider whether other similar transaction or events may have occurred and apply procedures to identify them. So this gives us a lot of good examples of what we could do to fulfill our requirement to obtain additional information about suspected non-compliance. And also from our requirement up there, and in the letter B, the second bullet point was that we're supposed to determine how that suspected noncompliance affects the financial statement. And so these are a few things that we could consider when we are doing that evaluation. So we could evaluate the quantitative effect of noncompliance. So that could include fines or penalties that we would have to pay, or damages that we would have to reimburse to someone. The threat of expropriation of assets, enforced discontinuation of operations, and litigation. So noncompliance with the law or regulation makes it to where we have to shut down our business or a significant department of our business or line of service, then that could substantially affect our operations financially. Litigation, the legal fees could turn out to be very, very material. So besides the quantitative aspects, we would also need to consider the qualitative aspects. And so the item of noncompliance could certainly be small or immaterial, but that could end up leading to a very material effect on the financial statements. For instance, it could make a material contingent liability or a material loss of revenue, as in the case of enforced discontinuance of operations. So we can't just look at the materiality of the incident, but also the materiality of what else in the financial statements that incident affects. And from there, we need to consider whether that potential financial consequence of the incident requires an accrual or a disclosure to discuss or present the potential liability of that incident. For instance, if the incident causes a loss of a material significant business relationship, then we might need to disclose that information. Also, noncompliance might create a significant loss contingency that we should potentially disclose or accrue. And for instance, GAAP requires that to be disclosed or accrued for. And also, we should consider whether potential financial consequences are so serious that it would call into question the fair presentation of the financial statements, or otherwise make the financial statements misleading. So if this noncompliance issue is potentially pervasive across all the financial statements, or really forces a going concern consideration, or it provides a substantial doubt about the entity's ability to continue as a going concern, then we would need to consider whether the going concern basis of accounting is appropriate, and that's a circumstance for the financial statements. And so next, were required to discuss our findings with management of those charged with governance. And so we want to understand with, by discussing with governance or management, we want to understand their side of what happened and the way they understand it to have occurred, and see if we are both seeing the same thing. They don't provide us sufficient information to determine that the entity has in fact been in compliance with laws and regulations, then we may consider it appropriate to consult with their legal counsel about what the non-compliance issues, including the possibility of fraud or other possible effects on the financial statements. And so in that regard, we might ask management to arrange a consultation with their legal counsel so that we can understand better about what happened. And so if it turns out that management doesn't let us talk to their legal counsel, and we're not satisfied with legal counsel's opinion, if they do let us talk to them, then we might consider talking to our own counsel to understand if any laws or regulations have been broken, and then also consider the possible legal consequences, including the possibility of fraud, and then we can determine what action we should take, whether we should withdraw from the engagement or disclaim our opinion or something like that. And finally, we're required to evaluate the implications of noncompliance with regard to other aspects of the audit, as we saw in paragraph 20 above. For example, in our risk assessment and in the reliability of the written representations, as we discussed. And so we might consider whether withdrawal from the engagement is necessary if management of those charged with governance don't take remedial action that we consider appropriate, even when the noncompliance is not material to the financial statements. And as always, if we're considering withdrawing from the engagement, then we should seek legal advice in doing so, because we have a contract with the client, and so we need to make sure that we're able to withdraw and what would be the terms of withdrawing. And if it turns out that withdrawal from the engagement is not possible under the applicable law or regulation, we may consider alternative actions, including describing the noncompliance in our other matter paragraph and an auditor's report. So we might include an additional paragraph in our auditor's report to explain that noncompliance.